This is a financial statement analysis for 3M, prepared for Dr. Shiroki by Carrie Barclay. 3M had less cash on December 31st, 2008 than it did on December 31st, 2009. The firm's ending cash and equivalents for December 31st, 2008 were $1.849 billion, compared to that of December 31st, 2009, which were $3.04 billion. This means the firm was more liquid and had more cash on hand for spending or investing in 2009 than it did in 2008. This is beneficial to the firm and is looked at positively by investors. 3M uses the FIFO method for valuing inventory. FIFO is short for first in, first out. Using this method, the inventory bought or used first are sold first. So, the inventory left over at the end of the year or quarter is the newest inventory received. 3M's total common equity at the end of 2009 was $13.302 billion. This is larger than the year end of 2008, which was reported to be $10.304 billion. There was an increase of $2.998 billion, which is good because that shows growth. 3M's operating income in 2009 was $4.814 billion. When comparing that to the operating income for year 2008, it is less. 3M's operating income in 2008 was reported to be $5.218 billion. This is a decrease of $4.04 million. This could be due to the 2008 financial crisis, and as discussed later, 3M follows the market for the most part. The net income chart shows 3M's net income for fiscal years 2003 through 2009. The charts to the right show the PE ratios for the 4 quarters of years 2008 and 2009. To calculate the PEG ratio, the formula used was the PE ratio divided by the growth. I calculated the growth in 2008 by taking the 2008 sales, subtracting the 2007 sales, then dividing by the 2007 sales. I then divided that by the 4th quarter PE ratio, which gave me a PEG ratio of 3.64. This indicates that 3M stock was overvalued in 2008, since companies with a PEG ratio of 1 are considered to be valued fairly. After calculating the growth for 2009, the PEG ratio in 2009 ended up being negative 2.12. This indicated that the 3M stock was undervalued in 2009. The market had dropped because of the economic crisis in 2008, which could be a reason why 3M stock dropped and was undervalued. The PE ratio is a valuation ratio of a company's current share price compared to its per share earnings. The higher the ratio, the more investors suggest higher earnings growth in the future. The PEG ratio is used to show whether a company's stock is fairly valued. It is used to show which companies have good growth prospects selling at attractive prices. Basic earnings per share is calculated by dividing the net profit by the total number of shares. This shows a rough estimate of a company's profit that can be allocated to one share of its stock. A diluted earnings per share is more complicated to calculate than the basic earnings per share. Diluted earnings per share take into consideration convertible bonds, convertible warrants, convertible preference shares, and stock options outstanding on the company's books, which are then converted into shares. If a company needs to raise debt, a company might use the diluted EPS, which would result in an increased number of shares for a company. This in turn gives an equity shareholder a more correct picture when investing in a company. According to Yahoo Finance, for the year end of 2012, the cash reported was $2.883 billion, which is the same as on 3M's annual report. The cash for the previous years of 2010 and 2011 are also identical on both reports. The income available to common shares at the end of 2012 was reported to be $4.44 billion on both Yahoo Finance and 3M's annual report. Similarly, for years 2010 and 2011, the numbers reported were identical. In 3M's case, there was not a discrepancy between the annual reports and the annual reports made available on Yahoo Finance. If there were to be a discrepancy, it could be due to the fact that figures could be rounded to different decimal points or input mistakes could have been made. 3M's Stock Scouter rating is 7 out of 10 and is expected to match the market over the next 6 months with very low risk. 2 or more executives, directors, or major shareholders have recently sold a small number of their shares. On Yahoo Finance, one of 3M's competitors is Johnson & Johnson. However, J&J has twice as much revenue as 3M. So keeping that in mind, the PE ratio, PEG ratio, and EPS are around the same with taking size into consideration. The table shows the growth in earnings estimations for 3M, the industry, and S&P 500. This shows that 3M has previously outperformed the industry and market in years prior. It is also expected to continue to outperform them both. Net cash from operations increased from 2008 to 2009. In 2008, the net cash from operations was $4.533 billion, which is a $408 million change from 2009 that had a net cash from operations of $4.941 billion. As we look at years 2008 to 2012, there is always a positive change from the cash flows of operating activities. At the year end of 2012, cash from operating activities were reported to be $5.3 billion. Net cash from financing activities does not follow a similar pattern as above. In 2008, net cash flows were reported to be negative $1.766 billion, whereas in 2009, it was reported to be negative $2.014 billion. As years go on in 2010, the net cash from financing activities decreased even more to negative $2.184 billion and then decreased even more in 2011 before it started to increase in 2012, where it was reported to be negative $2.058 billion. Net cash from investing activities followed a similar pattern as the net cash from financing activities above. In 2008, net cash from investing activities was reported to be negative $2.399 billion, then increased in 2009 to be negative $1.732 billion. However, it then decreased in 2010 and 2011 to negative $2.62 and negative $2.718 billion respectively. It then started to increase again at the year end of 2012 with reported cash from investing activities of negative $2.686 billion. The net cash with all of these factors combined ended up positive for all 5 years. In 2008, the net cash ending balance for 3M was reported to be $1.849 billion, which increased to $3.04 billion at the end of year 2009 and increased even more to $3.377 billion in 2010. After 2010, there was a decrease to $2.219 billion in 2011 and then a little increase to $2.883 billion on December 31, 2012.